This week on Retirement Approved, stablecoins. Let's talk about the dollar going digital, what all that means with Matt and Steve here on Retirement Approved. Hey everybody, welcome to the podcast. Thanks for hanging out with us here as we talk investing, finance, and retirement. And guys, we got an interesting show for folks. The dollar going digital, stable coins in 2025 and beyond. So we'll get into that and let you guys break it down for Steve, my friend. What's going on, buddy? How are you?
I'm doing well. I'm just glad we're recording inside. Get out of that heat for a little while. Ooh.
Yeah, the time we're taping, the heat dome is fully upon us. That's for sure. So it's a little hotter where I'm at than when you guys are at, but it's pretty toasty, I'm sure, everywhere. Matt, how you doing, pal?
I'm doing fantastic. Happy to talk about not a war and not tariffs again. So,
well, that's
we're doing everything
point.
We can avoid, everything we can do to avoid those topics.
That's great. Well, let's get into it. So, I guess whoever wants to start, let's. What are stable coins?
Yeah, the easiest way to think about a stable coin is think about going to a casino. So, the world of crypto, this is going to be the most boring part of the crypto world, but you go to a casino, you exchange your $100, you get $100 worth of chips. You can figure out how you want to spend it. You can go play blackjack, poker, whatever you want to do with it. But those chips are worth what you paid for them, $100, unless you lose it. So that's kind of crypto, is you never know what game you're going to play. So if you go to the casino, you go to bed, you can wake up and redeem those chips in the morning if you wanted to. So that's what a stable is. It's just a digital dollar in the crypto ecosystem.
Hey, what happened to the Chuck E. Cheese analogy? We like that one here.
that is the blog I wrote. Yeah.
The Chuck E. Cheese tokens. I like those.
In all seriousness, if you missed the blog that Matt wrote last week, go check it out. There's a ton of information there. We gave him kind of a hard time for his Chuck E. Cheese analogy, so he went to the casino this time.
We'll put a link in the show descriptions for this week so they can check out the blog.
But no, we wanted to go over stable coins today because they are in a way kind of dominating the headlines, and we're getting more questions on them. And a lot of people are just concerned because they don't understand them. They sound kind of scary. What are these things that we're going to be paying with in the future? Are they going to replace the dollar? Are they going to hurt the dollar? What's going on? What are they going to do? And actually, no, they're going to strengthen the dollar, not going to replace it. They're not going to hurt it. We're going to actually be exporting the dollar. And I got a nice chart if we can throw it up. And this really breaks down, how stable coins help export the dollar. And you look at it, digitizing USD for global use, enabling permissionless access, powering DeFi and crypto finance, facilitating cheaper cross-border payments, providing a stable store of value for emerging markets. And really, to take it one step further and break it down a little bit more, we're kind of spoiled here in the US. We've had access to the global reserve currency. It is our currency, the dollar. There's a lot of countries out there with volatile currencies that don't have access to the dollar. And now that these stable coins are backed by the dollar, and these countries have access to them, if you had an internet connection and a digital wallet, now you can actually go and buy these stable coins. And in a way, you're buying the dollar, and you're transacting now with these stable coins. You're transacting with the dollar. So that's going to just strengthen the dollar. And then you look at these stablecoin issuers, these companies, what do they have to do as more stablecoins are purchased? They have to go in and buy U.S. treasuries to back them.
Right. And that's huge. More demand for U.S. treasuries. Think of that like JP Morgan. They're the biggest bank out there, $700 billion market cap. They don't pay their customer. I think you're getting 0.01% still when other banks are paying you more. But what are they doing with your deposits other than lending it, buying mortgages and credit card lending, auto lending, that kind of stuff? But they're also buying U.S. treasuries, earning that yield. So that's exactly what these stablecoin companies are doing. They're taking in dollars, buying treasuries, and they're keeping that yield right now for themselves, and it's very profitable. So it's going to keep growing and growing.
Yeah, the majority of these stable coins, they're fiat backed, and what's the global reserve currency? It's the dollar. So they're backed by the dollar. And you actually had Treasury Secretary Scott Bessent said in a recent interview, he believes stable coins could be one of the largest buyers of U.S. treasuries in the future. And he thinks stable coins could actually be one of the things to lock in dollar supremacy. That is so just unbelievably bullish. I mean, Matt and I have been monitoring these for what? It seems like the last 10 years. I know it hasn't been that long, but I mean, you go back 4 or 5 years, it's like these are a total scam. And now you have the U.S. Treasury Secretary saying things like this, and you have our president launching a stable coin with his sons. It's just kind of unbelievable the progress that we've seen in this industry.
Yeah, and our clients listening might be thinking, am I ever going to own stable coins? Should I own stable coins? And Steve mentioned we're pretty darn spoiled here in the US. We don't really have that need, where internationally, that's where you see stablecoin share really pick up. So if you look at this chart, we're on the right here, 37.9% in terms of stablecoin transaction volume, pretty comparable to Bitcoin. But then if you look at Latin America, Eastern Europe, Africa, Middle East, those numbers go up, up, up. And they don't really care about transacting in Bitcoin because it's such a volatile currency. They don't want to cut your hair and get paid in Bitcoin and lose 20% the same day.
Like Matt's saying, now that they're transacting in stable coins, what are they backed by? Now they're transacting in the dollar when they wouldn't have been before. So it just increases dollar dominance globally.
One thing to add there, stable coins are 90% US dollars, and then 10% a mix of others, whether that's gold, euro, so on.
Matt, so what is with this? I've been hearing like this, the Genius Act, or what's going on with this legislation?
You got it. So this is our first legislation regarding stablecoins. So you can see Steve mentioned Treasury Secretary Bessent earlier. He's talking about how stablecoins could grow to 3.7 trillion with the passing of this act. And what this act essentially means, it's the stamp of approval for banks to be able to issue stablecoins, house stablecoins, and we'll likely be seeing JP Morgan get into this. They already have actually an internal coin, JPM coin, that they use to settle transactions internally. But Bank of America is going to come out with a coin. Probably more and more banks are going to issue coins. And it's, as you can see what Bessent says here, it's a win-win for everyone involved, the private sector, the treasury, and consumers.
And you just talked about all that global transaction volume. That's without any clear guidelines or regulations in place, without any regulatory infrastructure. And now it looks like we're getting that. The Genius Act, it's moved through the Senate. It's now in the House. And the president actually tweeted this. I'm just going to read it because it's one of the most bullish tweets I've ever seen. The Senate just passed an incredible bill that is going to make America the undisputed leader in digital assets. Nobody will do it better. It is pure genius. Digital assets are the future, and our nation is going to own it. We are talking about a massive investment, big innovation. The House will hopefully move lightning fast and pass a clean Genius Act. Get it to my desk ASAP. No delays, no add-ons. This is American brilliance at its best, and we are going to show the world how to win with digital assets like never before. Now, after reading that, I know we have a lot of conservative clients. They're probably going, well, that sounds bullish. Do we own these stable coins? How do we have exposure to these stable coins? And we do. So Matt talked a little bit about comparing stable coins to casino chips earlier. Yeah, stable coins are casino chips, but we want to own the casino. And right now we look at where these stable coins are being issued. They're being issued on Ethereum. Ethereum is the casino. And in a few of our models, we own that casino. And as you can see right here, Matt put together a pie chart just kind of showing you the dominance of Ethereum in the stablecoin space right now.
Yeah, so you can see the Ethereum network has about 50%, and then not going to nerd out on you, but the way it's structured is it has offshoots as well called layer twos. So that'll be like Arbitrum and Polygon and Base and all that. So probably totals up to be 55 to 60% of all stable coins are on the Ethereum network in some capacity. Then there's Tron and Solana. Don't need to get into all the networks, but Ether, the Ethereum network is essentially the most decentralized, and it's the most trusted because it's never gone down before. If you're sending $1 billion, you kind of want your network to be up. So that's why the assets will probably flow to that network and ultimately, hopefully, accrue value to the Ethereum network. But there's also other ways to get exposure to stable coins and the stablecoin growth, and that's owning stocks. So we've talked about having Coinbase in our model before. That's been the number one performer in our aggressive growth model. We also have Circle, who just made their IPO debut not even a month ago. It was like June 4th, June 5th, something like that. And it went from $30 to like $270 a share in a matter of a few weeks. Went to a $70 billion valuation. Made absolutely no sense. I am not saying go buy Circle. It's just saying the demand is there from institutions, from retail. They wanted in on this stock, even at absurd valuation. So I know it's gone down the last couple days. Not sure where it'll be when this airs, but I'm certainly not condoning buying that one right now. So Circle is the second largest stablecoin issuer. USDC is the coin that they issue. It's got about 61 billion in assets, and number one is Tether. So Tether is an offshore company that has about 160 billion, so more than double what Circle has. But that's kind of a result of the regulations, the lack of regulations we've had over the last decade, allowed Tether to become such an integral part to the crypto ecosystem. Now, what is this going to look like 5 years, 10 years from now? Who knows? Because there's going to be a lot of competition between regulated institutions now.
Yeah, and that's what Scott Bessent and David Sachs were talking about. They want the innovation happening here. And, over the last 5, 6, 7 years, we've kind of driven that innovation offshore, and you're seeing that with Tether. So we want to bring that back to the US. And I think that's what we're going to see with this regulatory infrastructure that we're finally going to have because of the Genius Act. We're going to finally have these rules for people to abide by. I mean, you look at the Biden administration and Gary Gensler, it was really regulation by prosecution, all these different lawsuits that we're seeing. Nobody wanted to deal with that. So you're going offshore. And now that we're possibly going to have these regulations in place, you're going to see, PayPal, JP Morgan, big tech, Amazon, Walmart, Meta, BlackRock, Visa, MasterCard. You're going to see them all possibly launching stablecoins in the near future here. We'll see how this plays out, but I think that's what we're going to see. And Meta tried to do it. What was it? 2019.
2019. Yep.
Yeah, they went through hell.
Yeah, the FDIC said, nope, don't do that. We don't want a social media company running our money system.
But I think that's all about to change. Who would want to deal in a space where it's like, well, what are the rules? What are the regulations? What are the guidelines? What do we have to follow? Who knows? Let's just see. Launch one and we'll see if we shut you down. And that's really what it was.
Right. And kind of why we're talking about this. So a lot of clients might be thinking, why in the heck are you even talking about stable coins on crypto networks? And like, what does this have anything to do with retirement? And it's kind of like the sands of the retirement are shifting below your feet of the financial system, and it's slowly being upgraded. So if we look at the financial system, the banking system, it hasn't been upgraded, I don't know, in 20, 30 years. I guess the latest innovation would have been coming out with mobile apps in 2010. But there's not a lot of innovation there, and that's by design. And even in traditional finance, so you think about your Fidelity account, not a lot of innovation happening with products and settlement. The SEC celebrated last year that trading times went from 2-day settlement to 1-day settlement. So if you sell a fund, you can get your money the next day instead of 2 days later. And that was 3 days a matter of years ago. So that was their big innovation. But
how many complaints have you gotten from clients on how long is it going to take you to get me my money?
Yeah.
Well, that's BS. That doesn't make any sense. If boomers are complaining about how long it takes, imagine Zoomers. They're not putting up with this.
Yeah. Right. I imagine a client calls on like a Friday at 3:40 p.m. We don't get the trades in, so we got to wait till Monday. But Monday is a holiday, so then we put the trades in Tuesday, and the client's not getting their funds till Wednesday. That's just not really acceptable to younger generations, and that's why they pay that like 1% fee to have the money show up at your bank instantly, that like Robinhood and PayPal offer. But that's why we're really excited about this innovation, because what's going to come is a lot more. There's going to be tokenized stocks, tokenized bonds that settle like that, and probably a matter of, could be years where we're seeing stuff like that, and then that'll open up the world to more private investments too, tokenized real estate, tokenized private equity, who the heck knows? So
yeah, you're looking at real world assets at that point. We'll see where it goes. Just listening to Scott Bessent the other day, going from 250 billion to possibly close to 4 trillion, he's saying by the end of the decade, would be unbelievable. And then you start talking about real world assets, like Matt said, tokenizing those. Who knows where this goes in the future, but it's definitely something we want some exposure to. It all depends on where you're at in life. If you're in retirement, we're talking a 1 to 3% allocation. If you're younger, you could go higher if you wanted to, 5 to 10%. I see no issue with that, but you don't want to ignore it completely because you're scared of the technology. And a lot of times we see with the psychology of investing, it's like, well, I don't understand this stuff at all. I don't get it. Stable coins, it scares me. The new technology, are we going to use it? I mean, those are the same people kind of thinking, well, the internet was scary. Was it a fad? No, it wasn't a fad. What I'm saying is we definitely don't want to ignore new technology because we don't understand it and we don't quite use it yet, because in the future, in the near future, we could use it and there could be profit to be made there.
Yeah, this all sounds, I get it. I get people saying this seems really confusing, and there's a lot of nuance to it, right? So again, probably working with somebody who's got their head in the game is going to help that a little bit, Matt.
For sure. And that's why we've spent years trying to wrap our head around this. I first heard of Ethereum in like 2017. It's like, you got to read about this stuff once a week to get an update and figure out where it's going. It is complicated, but just like AI is complicated, you can't look up NVIDIA and understand how chips are made and how GPUs are used and all that and understand it instantly. These things take time to grasp, especially when you try to project where they're going 1 year out, 5 years out, God forbid, 10 years out. What is this all going to look like? But we know it's going to all be a heck of a lot bigger, and we want a piece of that pie.
I think it is. It's very difficult to understand. I think that's one of the reasons Bitcoin was so successful. It's store of value. It's digital gold. It's easy to explain. But when you get into Ethereum and layer twos and everything going on there, it's a lot more difficult to understand all that and to wrap your head around it. So you look at the transaction values and the adoption rates and what we're seeing, I think we're going to see continuous growth there. So we definitely want to make sure that we have an allocation to it.
Yeah, it can be a head scratcher for a lot of folks out there. So there's a lot of information. Matt, you said it really well. You've been studying this stuff for years now. So if you need some help, if you're confused by some of this stuff, like many of us are, that's why it's important to talk with somebody who, again, has the eyes on the prize, so to speak. So reach out to them, get onto the calendar. You can do a couple things. You can just give them a call if you want. We've had the number up on the screen for you, 248-305-9911. It's also check the show descriptions below because we have links to the website. You can get some time on the calendar with the guys, whatever you'd like to do, rwpaul.com or, of course, retirementapproved.com. But we got links and all that information in the show descriptions below. So get on the calendar, have a conversation, especially dealing in a world where so many of us are still trying to catch up. It's important to have somebody helping you out with that, and the guys are certainly going to be able to do so. So reach out today, and don't forget to subscribe to us on Apple, Spotify, on the audio side, and of course on YouTube. Hit that thumbs up, that subscribe button, and that notification bell so you catch new episodes when they come out. Guys, thanks for hanging out and breaking down stable coins. I'm sure we're going to be doing more of this conversation in the very near future. So we'll talk to you next time here on Retirement Approved. Thanks for hanging out with Matt, Steve, and myself.
Retirement Approved is brought to you by Richard W. Paul & Associates, an SEC-registered investment advisory firm. Throughout the presentation, we may generally discuss different financial vehicles. However, nothing we say should be construed as a recommendation to buy or sell any financial vehicle, nor should it be used to make decisions today about your investments or insurance. For full disclosures, check the show notes of today's episode.